and welcome to Pro Trader Strategies market commentary for Monday, November the 9th. It is a crazy day in the markets. Everything is all over the place because of the reopening trade kind of is in full swing right now. Why? Because we heard, unless you were under a rock, that Pfizer has come up with a vaccine with a 90% effective rate. So that means it is on to, and that was on their basically they're going to get fast tracked through the FDA for this. Now the markets were really blasting off to the upside overnight. Heading into the day, we started seeing more and more people start to realize that is fantastic news, but it's still going to be like March 2021 before we can really see this vaccine get out to the people. In that time, we also started hearing a lot more governors of different states talking about more lockdowns, closing down restaurants, stuff like that. So another wave of lockdowns with these coronavirus spikes. So that's kind of been a little bit more overwhelming the markets as the day has progressed. We're seeing a lot of pullback here in the equities. So without further ado, let's get on with it because there's not really any economic data. We do have a couple of Fed governors speaking here in the United States, but for the most part, because it's a Monday, there's not really a whole lot of economic data. It's all being driven by Pfizer and different lockdowns. So with that being said, the reopening trade, that's shooting crude oil higher by about $3 on the day, back up into the 40s. Gold futures getting slammed down over 5%, down $100 on the day. It has not seen really an uptick all day. Now, this is an opportunity, I think, you guys. We're going to have to really start looking into this because with this pullback happening, we still have stimulus out there, all right? So there are stimulus up in the air. And once that stimulus comes through, however big it is, that's going to weaken the dollar and send gold futures back towards the 1900 handle. So there is opportunity here. We did see a lot of volatility come out on this sell-off here, but I still believe that there's something in this, especially once we start talking about stimulus again. This is going to get some legs, and it's found an area of support right down here at this 1850 area. Now, there's no Fibonacci that I have lined up with it, obviously, but you can see it's happened several times before where we have found support at 1850. So I think that we might start seeing the momentum slow down a little bit here. I don't think we're going to necessarily go down here and test 1800 necessarily. If it does, then I think that that's a buy it with both hands at that point because of the fact that we are likely still to get a stimulus package. 6 months down the road before anybody gets a vaccine is not going to turn this economy around. All right, bonds following suit, down 3 points on the day, 2 ticks shy of it at this point on the markets. Again, I was expecting us to get a higher wave correction back up into the 178. I don't think, you guys, that just because we found this vaccine is changing how the economy is working right now. It's not working right now, especially if we're starting to see slowdowns or lockdowns happening here in the United States. Another round of that could be devastating to some of these smaller businesses. So that being said, interest rates are not going to go any higher. So again, opportunity here, I believe, in the bonds that I haven't done anything at this point. I'm waiting to see probably closer to the end of the day to see how everything's shaking out in order to start putting some trades on for those two, gold and bonds. So I'll talk about that tomorrow or do it tomorrow. I don't know yet at this point. VIX, as you can see, is coming off a little bit, and that's because we saw some major spikes here. Dow Jones testing 30,000, overnight. So that isn't a day session. We could probably just drop off the extended hours trading, and you can see that that wasn't realized during the day session, and a very heavy trade from the open of today and extending throughout. So it looks like a nice big green candle, and that's basically because once we got that news of Pfizer saying that they had a great trial with this vaccine, and the markets really blew it off to the upside, as we'll see a little bit more in the breakdown of the E-mini S&Ps. Here we have the NASDAQ. It's up on the day, 55. Don't get me wrong. It's the lagger, though. Why? Because this is part of the stay-at-home trade, right? What we're seeing is a lot of these technology stocks that were doing very well during all of this are getting pummeled right now. We'll see a couple of them. Peloton is down huge today. Zoom is down huge today. So a lot of those are off. We're seeing Caterpillar. We're seeing some of the travel and leisure, AMC. Everybody talking about that one today because it was up almost 48% or something at one point in time. I think it's given back a little bit there. But that equates to $1 in that underlying. It was trading around $3, remember, during this whole pandemic. So it's up $1, $1.50, something like that. And everybody's yammering about how it is up almost 50% on the day. Love statistics. All right, so we've got the NASDAQ dragging because it is the stay-at-home trade. Like I said, Zoom and Peloton, a lot of those are just getting pummeled today. E-mini S&Ps up 100 points because a lot of these stocks were some of those value trades that were part of the reopening. Coca-Cola's over there in the Dow Jones, but Coca-Cola was up huge today. I'll talk about that as part of my trades that I took off on Friday. And then we got the E-mini S&Ps. You can see overnight was a little bit positive. Most of this, I think, had to do with probably over the weekend. A lot of people were saying that, it is basically a Biden victory. So I think that gave it a little bit of upside momentum. But this is the Pfizer release of their results on the vaccine trial. And you can see heading into the day, we just pierced that high, and then it's been pretty much a sell-off since then as people are saying, well, yeah, that's great, we got it. All right, so, future outlook is pretty imperative right now. It is looking pretty rosy. The reopening trade is back on, but then people started saying, well, we don't have a stimulus check. We still have, this vaccine not coming out until March. So a lot of that is weighing on the overall markets as of right now. Biogen off to the upside. Wanted to talk about this because this is their, I believe it's their Alzheimer's drug, and the trial came out, and obviously it is not what everybody was hoping it would be. All right. And then we've got things like Zoom. You can see Zoom off by $50. It was over $100 on the day, trading into the 3 handle there. We could probably just take a look at what the low was. I think it was off $100 earlier today. The low was 402 even. So that takes it off another, let's call it 40 points. So 90 some odd, $96 on the day at one point in time. Making a bit of a comeback here as people are realizing, yes, there's still lockdowns happening. People are still going to be doing Zoom, at least for the foreseeable future, at least 6 months from now before we really start probably being comfortable or at least a little bit more positive on this vaccine. Not everybody's going to be able to get the vaccine immediately. They've got to produce how many millions before people can actually get those. And there's probably a lot of people that aren't going to do the vaccine simply because it's a brand new drug that you're going to have to stick into your body, and who knows, right? So I think people are going to wait and see how this affects other people, if there's any ill side effects and things of that nature. And then we've got, let's talk about my Coca-Cola trade. I talked about this on Friday that I was going to be taking off the short call and the put around this trade. You can see those short puts, the short puts are nowhere close anymore, but the short calls I was able to take off on Friday as well. So on all of this being said, with this trade, it has worked out swimmingly for just staying mechanical with a trade that originally went against us and started fighting us, right? This was part of the whole coronavirus sell-off. I had sold some puts when we had extremely high volatility here and wanted to take advantage of that. Well, I had sold, when the market first started coming off, I had sold the, I don't know what month it was, I had sold the 45 puts in there. Let me try and get more days on here because it's quite a ways away. All right, so that's what I had ended up selling the March, 53 puts in there. So I had sold originally the March 53 puts right here, March 53 puts for $1, was it? No, 40 cents. 40 cents there. Obviously, those are the ones that got put to me, and I then sold some April, sold the April 30 puts right in here for another 76 cents when we got the real high volatility, 76 cents in there, and then covered those for 13. So a total collection of, let's call it 63 cents, right? Because the puts that got put to me, I get to still keep that collection. I rolled out of those April puts for 63-cent profit there, and sold the calls in August. Sold some August, let's say 50 calls. Sold the August 50 calls originally. Sold those calls for 33 cents, bought them back for 9, so I collected 24 cents there. And then went out and sold the 43 puts in September. Sold the September 43 puts in there for a collection of 49 cents. Bought them back for 14 cents. So I collected a credit of 35 cents on there. So total credit of 35. Then sold the October 45 puts, and then I got the October 45 puts. Sold those for 53 cents, bought them back for 14. So we're going to call that a collection of 39 cents. Total collection of 39 there. And then I had sold the Strangle where I legged into it, and had sold the November 52 calls and the 44 puts in there. And I did these originally for 40 cents, covered them for 11 cents on Friday. So that gives me a credit of 29 cents, 29 and 11, yes. And then the 44 puts I bought back for, sold them for 40 cents also, bought them back for 7. So I got a total collection of 33 cents there. All right. So now, and it's trading right around $52, but I'm long at 53 in my account. But you can see 40 cents there. All of these aren't exactly the full tranche of what I had originally done for this. I did a full tranche on the 53 puts that I had sold here. But not all of them are. Like the puts, these April puts were about a halfer. The August, the only ones that weren't a halfer was the October. The October here was another full tranche, and these calls were to cover the entire tranche as well. So not all of them are exactly a full tranche, but you can see lowering my overall cost basis by 40 cents there. I want to give me a red one. 40 cents there, 36 cents there, 24 cents there, 35 cents, 39 cents, 29 cents, 33 cents. All of those collections of credit lower my overall cost basis on this trade. It's also giving me an extra synthetic, well, that's, I want the dividends, where I'm getting dividends in the same time, all right? So it's giving me extra dividends, lowering my overall cost basis, whatever you want to say there. But you can see, obviously, my break even is much lower than the $53 that I'm looking at, well over $1 to the downside in this trade. So I'm kind of looking at it like I'm in the profit margin for this trade. So great trade in Coca-Cola. I still have it on. I'm going to leave it on for the reopening. As you can see, they did get a nice spike, but along with everybody else, they are starting to see that fade away as some of the reopening is maybe have gotten a little ahead of ourselves there. But we could take a look at Zoom, see it off by 50 some odd points right now, as you can see here, but making its way back because we're not really looking at the big close down right now. We can look at like Caterpillar, Ford, making some nice moves today. All of these being a part of that reopen trade. I can't think of what Peloton is right off the bat, but Lulu is off, as I guess people aren't going to be wearing Lulu at home during their Zoom calls, but I still think that Lulu is going to do well here going forward, as probably they've captured a new group of people here going forward. So with that being said, I am also looking at a couple of things. Penn, oh my gosh, Penn was just blew the top off earlier today, was trading $75. So it's off by about $10 at this point. It was up $11. I'm not covering this trade. I'm still gangbusters on them. I think that Portnoy is making them a household name. So I'm going to stick with that. One other one, though, that we have here is IBM was making some nice moves to the upside as the reopening trade, I guess. I mean, this was one of the ones that was a tech that probably would have sold off because of the cloud and people maybe not using as much cloud going forward. But these are things that I'm looking at. And DIA. Now, if you guys remember this DIA trade, I put on for our long strangle trade just for a big move in either direction, which I basically have gotten, but it's taken so long for this trade to really work out that the theta decay is just really eating away at this one. But if you guys remember, I have on the November, and I'm long the 260 calls, which you can see were tested, but still not enough with all of that theta decay happening that I've had this on forever. And the along the 292 calls in there. So you can see that high of 299 was in effect off the open, and this is a taking out the overnight because it's a ETF. It only trades during the day, right? Well, it's come off quite a bit today, but it is something I am looking to roll out of here with this one and my IBM trade, which is something we kind of breezed on, but I don't think I talked a whole lot about it. But this IBM trade is also part of the short strangle webinars that we've got on. So that one's working out quite nicely despite the fact that we've gotten this big move higher. It's still within the range of my 205 puts in there and the 120 calls to create that strangle in IBM. So it hasn't gone anywhere. As a matter of fact, with all this volatility coming out, it's making it work out much better at this point. Still down on an open P&L, but at the end of the day, we're going to be looking to get out of these because that's around my 120s that I'm long in IBM from the earnings call, if you guys remember. So just kind of staying with that one at this point. And that's about it. That's all I've got for you guys. Couple of things that I'm just looking at. The Clorox trade that I have on for the long is not looking good as part of that whole reopen trade, right? I guess if we have a vaccine, we don't need to be cleaning it, disinfecting everything anymore, maybe is the thought process there. Kroger is also not doing too well today, but making a bit of a comeback. As I talked about with this trade, even with the reopen, I think more and more people are going to be shopping and cooking from home. But, that's my thought process. Plus, I think a lot of these companies like Kroger, Walmart, during the pandemic have gotten people to switch over to their signature brands and are very happy with those. I know I love their coffee, the signature brand coffee, and I also love Walmart's salsa. So, all right. Anyway, that's me. I've got that going on. That's all I got for you guys today, other than we do need to talk about our disclaimer and take a moment to go over this as we are an educational company. I'm not trying to get you guys to jump off the cliff with me. All right. So know your risks, know your reward. And if you can't take that, take it easy.